This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back. Happy Monday. Hope you all had a great weekend, whether you celebrate Easter or not, or if you had a 3-day weekend or not. Welcome back to a new full week of trading. Obviously in the news, the Pope has died. So if you are a devout follower, my condolences. But let's jump into these markets. We do have a job to do. Taking a quick look at breadth, we had 123 new highs on the NYSE versus 315 new lows. 18% of stocks were advancing today versus 78% declining, 85% below its 50-day and 82% below its 200-day moving average. All of the indices closed very deep in the red off the lows, but the Dow closed down 971 points or 2.5%. The Nasdaq was down 415 points or 2.5%. S&P similar percentage, down 124 points or 2.36%. All of the mega caps are red. Just across the board, it was a bloodbath. But it was a casual bloodbath. And what's concerning here are a couple things. While the market was bouncing in the last few minutes of the day, selling accelerated into that bounce. So that is a warning. You have been warned. That could have been a trap for dip buyers at the end of the session. Looking across the Mag 7, no good news here. You had Nvidia down 4.6, Microsoft down 2.3. These are all percentages. Apple down 2, Amazon down 3%, Google down 2.2, Meta 3.39, and Tesla down 5.7%. Tesla actually reports tomorrow after the market closes, and it's going to definitely move the markets overnight on Tuesday into Wednesday's session. I did want to include a few macro data points for free subscribers. The first one is current S&P 500 sell-offs versus previous sell-offs. And I've indicated with a red arrow, you are here. So if today was somehow miraculously the bottom and last week's low holds, maybe it's all over. But if we continue to sell off, you can see we're very early on in comparison to previous historical sell-offs. So that's the risk exposure. Looking at the concentration of the equity market, right now we are in the largest concentration of market cap into a few stocks ever in history, even during the great financial crisis or the dot-com boom bust. So you'd have to even go back as far as 1932 to even get anywhere close to where we are today. That's not good. And the source there is Goldman Sachs. The first chart was a user on Twitter X. And then the other one, there's this narrative battle between Trump and the Federal Reserve, Jerome Powell. Typically, this is a losing situation in history to fight the Fed. One last piece, hoping you will consider upgrading. In the private chats in real time, a little bit after lunchtime, I posted for the paying subscribers not falling for this bounce. Here's a screenshot of the NQ bouncing here a little bit after the noon session. A few moments later, we sold off. We continued to bleed in the afternoon. The Dow futures was down 1,200 points, over 3%. The Nasdaq was down 3.5%. And here's a screenshot of a anonymous paid subscriber indicator. It would have stopped you or prevented you from buying the dips or getting fooled into these rallies. You can actually see the side by side of this paid indicator that I share with paid subscribers or customers, however you want to consider them, as well next to the NQ chart. And you can see for every bounce, this indicator, intraday indicator, was a great lie detector. Switching over to what else I can talk about. Looking at what was strong and what was weak in the S&P and the NASDAQ, not much. Discover Financial was up 3.7. Fidelity, National Information Services, FIS, up 2.5. Dollar General, 2.4. In the NASDAQ, Kraft Heinz, up 1.6. Netflix, 1.4. Microchip Technology, 1.3.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.